Hello once again and welcome to my channel Sky Vision FX. Please subscribe, like, share and comment. Okay, so we have created this channel so that we can study and challenge ourselves and see how we can grow the FSB account to 500 from $50. I have done a review before, but I want to expatiate on how we're going to be trading this account. Okay, so let's look at the trade setup. We draw support and resistance on the daily time frame. If price gets to this support and resistance zone, we look to sell at the tops and we look to buy at the bottoms of those zones on a lower time frame. Strong zones are usually referred to at the psychological levels. So these support and resistance zones, especially once it gets to these strong zones, referred to as the psychological levels, which are 0, 0 and the 50, the 20 and the 80. We'll look to sell or buy at those levels. And then on these same lower time frames, we look for engulfing bars and kangaroo tails. So as a refresher, let's look at what are engulfing bars and kangaroo tails. So this is a bullish engulfing bar. Price, let's say price has been coming down. Okay, let's use another one. Let's say price has been trading down, and then it gets to a level. It gives this. Then we begin to see wicks. Once we begin to see wicks, price rejection, then we begin to anticipate that price may actually change direction. There, we want to then see an engulfing bar. And for me, the engulfing bar, a qualifying engulfing bar, is one that engulfs the previous candle or the previous series of candles. Okay. So as long as the body engulfs it, then that's an engulfing bar for me, a qualifying engulfing bar. The same thing happens at the top, these bearish engulfing bars. So this is the bullish engulfing bar. Same thing happens, So assuming price has been moving up and it gets to this top, it gives this bullish bar. Then on the next candle, it gives this bearish engulfing bar. Okay, as long as the body of this bar or the series of bars is engulfed by the next bar, then is a qualifying engulfing bar. And then I must also say that sometimes it might be two or more candles down to the on the left side. The same way on this one too, it could be two or more candles that is engulfed. So once we see that, then that's one of our signals. The second signal is the pin bars. Some call it the either the shooting star. Some call it shooting star, like this. They call it shooting star, or they call it a hammer. You see, it's almost like the head of a hammer. So, but I just call them kangaroo tails. So once I begin to see tails like this, once I begin to see tails, either at the top, at those zones we talked about, the 50, the 0, 0, or the 20 and the 80. Once I begin to see that on the lower time frame, then I begin to anticipate that price is likely going to turn. So the third, another way of looking at this is so we see how strong these bars are. So this is a very strong engulfing bar. If it's like this, we say, or rather, it's a strong bullish bar. This is a strong bullish bar. Something like this. Once you see something like this, when price is going up, and then it gives you something like this, then is a bullish bar, but it's likely that it's weak because we have a long tail. Okay, this is a strong one too. This is a good one. Now this is what I want us to pay attention to as well. So this will be the third chart pattern that I'll be looking for. They are called dojis. So it's an indecision bar, or they just call it a neutral bar. And then of course we have the kangaroo tail as well. So this happens. So if you see this when price is going up, and then you see this at the top, that means you can begin to anticipate that price is going to turn. That's what we'll look out for. The same thing happens on the bearish side. Once you see a candle like this, it's a very bullish bar. So it's a very bearish bar, very strong bearish bar. However, when price is going down, let's look at this. When price is going down, and then it gives you something like this, then it's a weak bearish bar. It's likely that price is going to start turning. So as we said, once you begin to see wicks, then begin to anticipate that price may likely turn, and especially if it's at those zones that we talked about, the 00 or the 50. And then of course the other ones are the 20 and the 80. Okay, then this is the indecision bar, the doji, and this is the hammer, or just call it kangaroo tail. Okay, so that we don't get confused. So these are the things we'll be looking out for on the charts. So let's go to the charts and see how that happens. So let's look at this price action here. Let me zoom in. So we see that price has been coming down. Now look at this bar. This is an engulfing bar. It's a bearish engulfing bar. However, it's not really the best engulfing bar. It's not the best bearish engulfing bar. Why is that? Because it's at the bottoms. So usually the best ones are the best bearish engulfing bars are the ones we see at the tops. So this is at the bottom, so it's not a very good one. That is what makes it not to really qualify. However, if we say, okay, this is a bearish bar, let's look to sell. Okay, we see market moves, but it doesn't move that much. And then we begin to see wicks. So we can begin to anticipate that price may likely turn. So look at this now, this setup here, these three here. So these two candles engulfs this last one, and in fact even this one too. So we take that as a signal that price may likely begin to turn. But what happens next? We see another bearish bar, and then we see this last three, which engulfs this series of candles. So we see that we can then begin to anticipate that, okay, with this action, with these bullish actions, price may likely turn. And then finally it gives us a very nice bullish engulfing bar, which engulfs this last bar. So just as we said, that is what we'll be looking out for. We'll be looking out for bullish engulfing bars or bearish engulfing bars. So we'll be looking for bullish engulfing bars at the bottoms, and then we'll be looking for bearish engulfing bars at the tops. And then what happens next? We see price move up. Okay, now this is on the daily chart, daily time frame. And what happens when the market was going to turn? We see it moves all the way up, and then it gets here. It gives us a nice kangaroo tail here. You see this kangaroo tail, and then it further supports it with a bearish engulfing bar, which engulfs the body of that kangaroo tail, and price moves down. Okay, so that is what we'll be looking out for. We'll be looking out for bullish engulfing bars, bearish engulfing bars, and sometimes we look out for those indecision candles like this. Okay, so let's look at what happened in this. If we could have spotted this trend, this move here. So to help us with that, let's mark those supports and resistance levels. So this is a support level here. Let's just mark those possible turning points. So this is another turning point because we see a wick here. Sometimes price will come all the way there, then form a double top and then move down. Okay, that's the support level there. I like this support level. I have two here actually, this or this. That's another support level. This is a possible support level. It's not all the support levels that you need to take. What the other thing you can do is just look at the line charts to see where the market turns. Okay, but what it does, it takes the closing price of those of the candles. So I like to use the wicks as well. So these wicks, I like to put the wicks in between those things as well. Okay, so here we can also say there is a nice turning point that could have happened here as well. Okay, so let's go to the 4-hour time frame. Let's mark this level. So this is the actually this would be where the thing began to turn. So let's look at that on the 4-hour time frame. Okay, so we see, let me zoom out again for us to see what happens. So we see, look at that turning point on the daily time frame. These levels, we mark them on the daily time frames. See how it corresponds so nicely. See how it does that so nicely. So we can say to ourselves that once price gets to these levels, we expect them to turn. Okay, once it gets to these levels, we expect them to turn. Okay, so let's do our analysis. At this point, let me show us the engulfing bar tool that I use as well. Oops, it didn't show. Okay, so let us start. So we know that this is the bottom. So what we'll be looking out for, price has been coming down and then it gets to this level. So what we're looking out for is engulfing bars or kangaroo tails. Okay, so let's do the next one. You see price moves. Okay, you see a nice push down. This is an engulfing bar, but it's at the bottom, so we'll be careful to take a trade. So even if we take a trade, supposing if you are trading 1% per trade, the risk you are placing on each trade is 1%. When you see something like this at the bottom, where you've established that it's a bottom, then you be careful. You can reduce it to just 5% or 1/4% if you have to take that trade. Okay, then we see a nice bullish engulfing bar. So we note that this is possibly a turning point. Next, we see a push down again. You see the push up. Okay, so supposing you decide not to take this trade and you're not that confident, okay, when it gets to this level, then you begin to say, okay, it looks like price is actually going to shoot up. So let's see what happens next. Whoa, see a nice, this is a weak bullish candle. It's at the top, but it's a weak one. So we call this a hammer. I call it a hammer. Sorry, a hanging man. See, I call it a hanging man. So the price is likely to push down. So let's see. But even when you look at this, we see that price went up, but it shows that possibly the sellers are really strong here. So what can happen next is to see that price, you watch for price to come down. That is what will happen next. So let's look at that. You anticipate that price will come down next. Okay, see price came down. However, it gave us what looks like a doji. It's an indecision candle. So you say to yourself, your interpretation will be that, okay, price is supposed to come down, begin to come down, but it's showing a lot of wick. So this is a nice, a long tail is a wick here. So that means the buyers are actually pushing up. So let's see what happens next. Okay, we see a small engulfing bar there. Oops, sorry. Then see another push down. Oh, we see it's closing up now. We see it's been going sideways at this level here. It's refusing to go down, it's refusing to go up. Let's see what happens next. Wow, very nice. Nice bullish push. So even if you are not able to take any buy trades down here, this is another opportunity. On a pullback, you should enter a buy to see if it will get to this level or even to the highs here. Okay, so you see what price did. It gave an indecision candle, but because we have said that this is a nice bullish push from this level, let's see how far the buyers are actually going to push it. And then we'll look at the next one. See, it's moving up. It's moving up very nicely. It's moving up. It's moving up. Do we have any signs of weakness? So this is a sign of weakness. This is an indecision candle, so it's getting weak, and then it supports it with this next candle that is actually getting weak. Let's see what happens next. Wow, it's getting really weak. So you will have taken a position. Either you take the position at this signal here, or when you wait for it, you can take a signal there to go short. Then it's showing some bullish strength there. Wow, it stops us out. Okay, but we continue because we know that it might be a winner, or it might be stopped out. That trade may be a losing trade, or it might stop us out. So let's look at the next trade there. So we see a lot of the sellers are coming in. Nice. So this is a nice push down, and that'll be a signal for us to enter shorts, and it goes down. And you notice that, remember, all these zones that we marked here, that is from the daily time frame. So that is how we're going to trade on the 4-hour time frame. Okay, that is how we're going to trade on the 4-hour time frame, looking at each of those levels. Okay, so let's look at these same levels on the 15 minutes time frame. So in case you have more time on your hands and you want to trade this same level, so let me introduce us to the other tool that I have. So let me introduce us to those levels that I call the 50 and the, so I call them the key levels, the 50, the 00 and the 50, the 20 and the 80. So let's put that on it. So we see how very nicely it just marks those levels. But I use these levels on the 15 minutes time frame. Okay, let me remove these engulfing bars. Oh, okay, well, I can leave it, no problem. Okay, so let's look at, let's just look at, instead of going bar by bar, let's see what happens. Okay, so from that level, we see price push up, and then we said, look at the turning point. It went above the 50 level, or this is the 00 level. It went above that 00 level, and then it gave us an engulfing bar here and a kangaroo tail, which is a nice combination, and then price came all the way down. It came down to the 20, and then at the bottom here we see it give us a nice bullish bar, bullish engulfing bar, because it engulfs this last bar here. Okay, so and then it pushes up, it comes down, it gives us another bullish bar. So we see price going up. So if we use that context, we see that price actually does change. It changes direction. So if it's in a down move and it gives us an engulfing bar, especially at the levels that we talked about, then we have some confidence that price is likely to push up. So sometimes it does not stop dead on that level. It might shoot down below it, or it might shoot just before that level. Now this is a nice one here. We see it get to the 20 here. It came here first at the first time. It got here, pushed down. What did it do next? When it got here again, it pushed even lower. It got here but did not close above. It pushed above but did not close above, and it gave us a nice double top. So this will be a nice double top, and it went down. Okay, so we'll see more of that as the trade unfolds. Okay, so if I know this, you may not see that. Okay, so let's look at so we just note that we see kangaroo tails, we see double tops, we see kangaroo tails and bearish bars, and once we see those things, we begin to look for and anticipate that market is likely going to turn. You see that setup here. So please just take note of this. Okay, that is what is happening. So let's go back to let's bring a new chart up and then put our. So what we'll expect this week, like we said before, market is ranging. So what I'm going to do to trade this week is, first I'll mark the tops, the top of the last bar, the top and bottom of the last daily bar. So this is on the daily chart. I mark the top and the bottom of the daily bar, and then I'll mark the highest high that I've seen in the recent price action. This is the highest high of these last few candles, and this is the lowest low of this recent, just the last few candles. Okay, so we know these levels here, and then after I've marked this out, I then go to, let me just show us those levels again so we can see it very well. Let me put this one here. This is the 1364 level. 136 level. This is the 135 level, and this is the 134 level. Okay, once we see that, we go to the 4-hour time frames. Let's zoom out a bit. So on zooming out, let's look at where are those possible turning points. So we know that we've established that if price closes below these levels here, pushes below these levels, so it breaks below and closes below, we'll be looking for it to go short. And where will be our target levels? Down here. Okay, let's mark those target levels on the daily time frame first. So we say if price closes down below these levels, this could be the first target, this could be the second target. Let's just mark the lowest low there, and then if it's going up, this could be a target. That's the first target. We see a wick there, and this could be a target as well. But let me just use this. Let me just put that there. Okay, let's just put it there. Okay, so these are the various levels. So let's go to the daily, the 4-hour time frames, and look at those levels. So these are our target levels for market to possibly turn. That is what we are saying. So these are the support and resistance levels that markets could possibly turn if it does get to these levels. So if we are going to trade, if we're going to take a counter trend, those are the levels we'll take those counter trends. So what we'll then do now, so let's also note that these levels are just they are zones. They are not strictly just the single line there. So what we will expect is for price to come down to this level. For us to take any trade here now, we see price. This is a risky place to place a buy. Oh, sorry, a sell is a risky one. And why do we say it's risky? Because we have a lot of support around here. So what price could do, what we anticipate is that price come down here and then shoot back up. So what we'll be looking out for is a bullish, any bullish sign that price is going to move up. That is what we'll look out for at this level here. But if we want to scalp, if we want to take a quick trade, we can then place a sell with a very small amount, a small risk. So instead of, if we are trading 1% per trade, instead of placing 1%, we can place either a 0.5%, half a percent, or a quarter percentage risk on this particular trade, because we don't expect it to go all the way, because there is a strong support here. Okay, so we'll be looking for a bullish sign here. That's what we'll be looking out for. Or if it gets to this level here, the bottom here, we'll also be looking for bullish signs. However, if we see a strong bearish candle go here and close below, then we'll be looking for continuation downwards to these levels, or down to these levels. That's one thing we can look out for. Okay, so let me put those levels in there again, the key resistance levels or the psychological levels, and then we'll go to the 15 minutes time frame. So we see right now, so we see price coming down. So what we'll then expect is to begin to look for, so if you just want a few pips, let's say 10 pips, 15 pips, or maybe even 30 pips, once it gets into this zone here, we'll be looking for a buy. We'll be looking to buy. So we'll be looking for an engulfing candle or a kangaroo tail or a combination of those. Okay, once it gets in there, so that we can buy. And when we buy, we'll just look for it to go to, so if we buy somewhere in here, we'll be looking for it first to hit this target here. This is the 50 level, and then we can take partial profits, and we can look to take another level here or at this level here. So once we see this, these are is a concept, but is another concept, but I don't want to bore us with that just yet. It's called the order block. So wherever I see indecision, you see some sideways movements. You see black, white, backward. That just tells us that it's an indecision area, markets, and then what happened next, the market turned. So market is likely to turn again once it gets to this level. Okay, so this is on the 15 minutes time frame. So we'll trade majorly the 4-hour time frames. Okay, let me remove that. Okay, so this is where we are. This is the nice one. So we'll trade the 4-hour time frames, and we'll be looking for engulfing bars and well, let's look at that again. So we'll be looking for these engulfing bars and kangaroo tails. Oops. Where's that? So we'll be looking for engulfing bars, we'll be looking for kangaroo tails, and we'll be looking out for dojis. So let's see how that unfolds in for this week, and see how we'll trade. So remember, please subscribe to the channel and like the videos, and make a comment. Let's see how we can even trade much better. Thank you very much.